Well, it won't come from the U.S. I mean, the March rates will not increase, according to Chairman Yellen and Mr. Lockhart, maybe in April. A lot of our clients really think that rates should stay low in the United States, that GDP growth is still very low, only about 2%. So that's probably the story.
Okay, now does it, I guess, change anything for you that we are seeing Fed speakers start to come out and actually say, you know what, these moves in interest rates might happen sooner rather than later?
Well, you know, what we're hearing, the sentiment here is that rates should stay low. U.S. growth is still not strong. Globally, it's not that strong. You have pockets of the economy that are doing well, but our clients are telling us they still believe in a low rate environment.
You're talking about fixed income, though. You're saying for those clients out there that have a short-term time frame.
No, I'm speaking from a FOMC perspective about creating growth in the States, whereby, I mean, you're correct on bonds, but keeping rates low to spur U.S. growth and actually around the world. That's what I'm speaking to.
Okay, so let's talk about what you're telling your clients out there. For those with a short-term time frame, which is 5 years or less, what are you telling them that they need to be invested in right now?
Probably more fixed income, safe assets. If they have a 5-year horizon, they don't want to take chances on any global equity swings. By that we mean global stocks, U.S. stocks, and so forth. They're in a different place. However, if you're a younger investor and more aggressive, you can afford that risk.
One of the big moves that we saw in the overnight trading session was this move in sterling, and it's got a lot to do with Brexit. I know that this is something that is currently on your risk horizon.
Right. Well, very speculative. Our clients believe you should be in that for the long term. It's very hard to speculate on a daily basis. Some of our clients do it, of course. But that's not typically, that's really a trading play. That's really not an investment play.
What's the trade?
Well, you're trying to do daily trades and beat the market, but it's very difficult.
Okay. Look, Tim, moving this forward a little bit, obviously you don't comment on individual stocks, but how are you taking, I mean, obviously you're watching the news, how are you taking the news that's coming out right now about Apple and the DOJ and the FBI actually postponing the case?
Well, that's obviously complicated.
That's a big sigh.
We don't have a view on. Well, we don't have a view on that. I mean, it's really going to come down to the United States Justice Department and Apple. I think investors are just watching right now. That's really all you can do.
I guess this brings up a bigger issue, and that is cybersecurity. And I notice that this is a theme that you're following, in particular when it comes to China investments and investing in that part of the world.
Right. Well, China, and you just touched on it, if I could elaborate, cybersecurity, probably the biggest threat that all of us face as investors, whether you're a large investor or a small investor, institutional, a very, very big thing. If you saw my write-up on everything from ransomware to other things, you know that it's everywhere. As far as China's concerned, their risks are probably no more than ours, and yet that exists there as well.